Folks, change is in the air in the real estate market, and it's all over the news, folks. But the actual underpinning data is actually much more shocking when you take a closer look at just how many different data points that Florida is lagging all the other states in the union suddenly after being the darling to which so many people found themselves relocating to this market, driving up prices for so long. The storyline after storyline points to one specific thing, that there is a major shift happening in the Florida market when you couple all these facts with the reality that according to Redfin, the amount of second home and short-term rental purchasing, the demand for income properties and investor movement is falling off a cliff. Folks, that kind of spells signs of trouble when you consider that Florida needed all of these factors. They needed a relocating remote worker to move into this market. You have all of this news coming out at the exact same time. And folks, all of them point to a massive shift in demand away from the state of Florida. And that's a major, major problem when, according to the data, most locals in Florida cannot afford the real estate at current pricing level. Because here's the deal. If you own a short-term rental here, if you own real estate here already, if you're considering buying here, this is huge information that you need to arm yourself with to make good decisions.
Record high mortgage levels are starting to take their toll. The mortgage rate is at 14.75%.
Folks, allow me to line up some alarming news headlines that you need to know about that relate to the strength of Florida and the future of this state in the year ahead. Look at this. Redfin just produced the following data. The pandemic-driven migration boom is waning, with the share of homebuyers relocating at the lowest level in 18 months. Now, folks, look at this right here. This is from data from the back end of Redfin.com, which is a national home search site, one of the largest places buyers go when they're looking to shop to go to a different state. They start their search, and look what's happening. There's been a nosedive in buyers actually looking to shop somewhere else. Now, couple that, folks, with a week later, Yahoo Finance broke the most recent research done out of the Florida Atlantic University. There's a group of economists that are always doing housing research. Then they pull those findings and they bring those to the marketplace. The findings they have here, there's 10 most overpriced housing markets in America. 5 of those marketplaces, folks, are in Florida. Now look at this. The article goes on to say that these economists determine the most overpriced housing markets in the nation by comparing average expected home values based on historical trends on the average list price across 100 largest metro areas and finding the cities with the largest percentage differences between the two, meaning that these prices versus what they normally should be approaching have completely jumped the shark. Number 9 on their list was Tampa, Florida, saying that they were overvalued by 43%. Number 8 on the list is a marketplace in Volusia County, Deltona, Florida. This is showing 44% overvalued according to this report. And again, Deltona, Florida is about 20 minutes drive north of the edge of Orlando. This particular market saw a lot of appreciation as people who could not afford to buy in Orlando ended up flooding towards this marketplace, saying, you know what, I work in Maitland, I work in North Orlando, I will make the drive, and Deltona, Florida saw itself growing in value. You have Palm Bay, Florida, which is showing nearly 45% overvalued off of trends. And I will say, folks, Palm Bay is in the Miami metropolitan statistical area. So it's grouped in with a whole bunch of cities on the southeast coast that are absolutely some of the strongest producers in the state of Florida. Folks, Palm Bay tends to be the one as of late that's starting to see a bit of a shift of more inventory out of that metropolitan area, which is undoubtedly the strongest remnant of all markets in Florida. Even while you see some of shocking data I'm going to show you today coming out of our state, folks, many folks will jump into the comments from the Miami area and say, Jared, you're crazy. It's super busy. Yes, I get it. Miami is still pretty stable. It is shifting, but Miami is really not causal for some of the crazy numbers you're going to see today that are shifting in real time here in Florida. You will see this area shift faster when the marketplace does shift even for the southeast. This will probably be one of the first to start to lose ground. The economists at FAU bring in Lakeland, Florida at 45% overvalue. And no shock here, folks, Cape Coral, Florida, 49%, which, by the way, folks, as a reminder, maybe you're watching this channel are going to complete my sentence right now. Cape Coral was the biggest loser in the great financial collapse in 2008. And about 2012, Cape Coral led the country in value loss. I think only one market was ahead of them, which might have been Detroit, Michigan. But this marketplace, folks, last time fell 60% plus led the entire state in price collapse over the last market downturn. One thing we know is right now, Cape Coral has very high inventory, a lot of price cutting, a lot of sellers looking to get out of that marketplace right now. I will say it is fascinatingly obvious that 3 of the markets out of the top 5 in America are actually in Central Florida. Once again, you have Deltona, Tampa, and Lakeland, all Central Florida housing markets that found themselves at the very top of the research from these economists. Now, folks, listen to me on this. As I go into the data, it's going to be very easy for you to find yourself concerned about your particular position in Florida. So if you own somewhere in the state of Florida, your marketplace may not be affected to the same degree. So all of these crazy trends that you're about to see, that Florida is leading the nation in so much more inventory than everybody else, leading the nation in price cuts, leading the nation in new listings, new construction inventory backing up here. As you go through all these things, listen to me. All the markets are not the same. You need to understand that if you see a statewide data point, it is not evenly distributed. If you were to throw all the houses into one bucket and call it Florida, they're not evenly affected. And I will tell you folks, there are certain places in the market that take a huge percentage of the space in the bucket of these negative market dynamics. For instance, as I mentioned, if you're in Miami and you watch my videos, you look at the thumbnails, you scratch your head and say, what crash? What danger? I don't see what you're talking about. If you just listed your house in the Orlando marketplace and you're an entry first-time home buyer price point, your house is gone. If you're in Tallahassee at most any price point, your house is gone. But I will say, if you are in the move-up market or the luxury market, most anywhere in the state, there might be some stress in that part of the market. If you have a short-term rental property on the market, there's definitely massive stress, massive increase, a higher percentage of impact of these negative market data trends on those segments of the market. And folks, this is no different. In the last GFC, we had the marketplace fizzle out from the top down. The marketplace as a whole ran super hot. Everything got bought up for a period of time. But then as the party started to draw to an end, all the people that were left over who were on the outside wanting to get into the party as prices shot off the charts and went up by 70, 80, 100%, those people then said, oh, the party's finally calm enough. I can get in even though I'm a first-time home buyer, even though I'm FHA or VA. Those people come into the party and participate towards the end. And as a result, even now, there is demand and there is market movement where the most affordable houses still are. Then on the opposite side of the spectrum, what oftentimes happens, the luxury end, then the mid-range, what we call move up, where people are coming from their first, second, third home, trading for a bigger, better home with a pool, all those kinds of things. Those upper level markets become impacted first, then their prices come down and they start to get eroded and they fall in towards the bottom end of the market. And then all of a sudden the bottom end of the market's getting really close to the trade up because the bottom end of the market still in high demand, still in high trades, still seeing itself appreciating to a great degree. Again, all of these pricing categories matter in different places. So in Orlando, your mid-range marketplace might be $500,000 or $600,000 on up. In Miami or Naples, your mid-range or your move-up market might start at $800,000 or $900,000 and beyond. But what I'm saying is, all of this is not uniformly impacting all Florida. Let me illustrate this further and show you another story you need to see. Look at this, folks. Data out of Redfin again. Demand for vacation homes and investment properties fall to a 7-year low. Folks, look at the demand trend going back to 2015 in the short-term market. I'm not going to make this about STR, but look how stable it is over the long run. I remember years coming into this 2020 pandemic phase, I remember looking at STR in the short-term market and be like, does this crap ever go up in value? I'd comp somebody's house who was bringing it to the market. They bought it 2 years prior. And I was like, holy cow, like the rest of the market went up much higher than the rate of appreciation for this market segment. But folks, look what happened. This chart, by the way, you say, Jared, what is this chart and why did it jump off the mark for like 2.5 years? Well, we obviously know this is pandemic season right here. This is the percentage of rate locks. This is a leading category for how many buyers entered this space in the span of 3 years. And you can see that this is just this span right here was probably like double or triple the history of time before that for several years running. At NestShare, we list your home for just 3%, saving you $25,000 on the sale of your property. You can trust NestShare to sell your home right and pass the savings on to you. Visit nestshare.com before you list your next home, and don't let anybody you know sell before talking to us. And folks, if you've been watching my channel, you already know how this went on. The reason why it collapsed, because in 2021, the government-sponsored enterprises got together and said, hey, we better jack up the price of these loans and slow people's interest in buying them. So essentially what they did, they made the loans so expensive that these weren't not profitable to buy anymore. Same thing. It's like same thing is happening in the housing market right now. You jack up the interest rate on 30-year fixed for the average buyer buying a house, then they compare that to rent and they go, rent's way cheaper. So this happened in short-term rental market and it collapsed the interest in that marketplace to where people cannot get financing on these now that actually makes practical sense. Couple that with all the data, and I'm not an STR expert, and I'm not making that stand on this video, but I am telling you, you do not have to research very far to find many sightings that occupancies and STRs are going down, and that's affecting the income that these people have against the fact that when they go and want to buy one, their cost of holding it is much higher. And folks, that has had an impact. I did recent research on this channel where I reviewed 4 or 5 different major short-term rental marketplaces here in Florida and found that they were up to 2 years of inventory, meaning if no one listed other property and all they do is sell off what is available at the pace they're currently selling for, folks, it's going to take them 2 years, some cases over 2 years to sell those properties. And you're seeing prices falling fast in that particular market. Some cases I've seen 5 to 10% plus in that market segment alone in a neighborhood where it's like you can visually see it, the exact same model. Apples for apples, 8-9 months go by, the next seller is selling for far less than what someone got in, let's say, early 2023. Folks, take a look at this. And herein lies the core problem with Florida. Florida is teetering back to where we were, but at the same time, we have a glut of inventory in several marketplaces across Florida, as I just showed you. So what happens? Your closing volume is going down while your active new listings are the highest in Florida out of any other of the 50 states. Like, we're taking the record right now in terms of people moving their inventory in. And honestly, I think a lot of that has to do with the fact that we also lead the states with like shadow inventory type purchases. We have a lot of inventory in Florida. We're one of the biggest states that has inventory that's empty, that's vacant much of the year. And that these are discretionary purchases for people, and that when times get tough, they can no longer hold them. And at the same time, folks, many times people jump into Florida and buy investment properties, such as they did in the GFC. They buy them on future anticipations of what? Rents keep going up. And the scary thing is, folks, that in the face of all these decisions, that a lot of folks are holding on properties that they shouldn't have bought. They're losing money. I talk to people on a week in, week out basis who call me and are holding assets that they cannot sell profitably, that are not making them money on a month in, month out basis. How long will that last? Okay. Can it last forever? Probably not. How many investments can you buy? Could you buy 20 investments in real estate if all of them are losing money? That's not plausible. Folks, we have a lot of motivated sellers in the wings in Florida. And that is what is scary as we lead the nation in so many of these market trends. And folks, if you own a home in Central Florida and you want help and you are tight, you need to see nestshare.com, where they list your home for just 3%. If you need to get out, you need to save on commission, you want full broker support, your home is in Central Florida. If you're outside of Central Florida, we do not have resources to help you with nestshare.com. But if you are, visit nestshare.com and find out how they can help you. And by the way, continue the conversation in the comments. Florida, what's the future hold? How does it look where you're at? Let's talk about it down below. We'll talk to you real soon.